Hello, this is Justin, and this video is about why investors should not be too optimistic about developments of coronavirus treatment. First of all, I want to say that this is very good news for humanity and for society as a whole, because we can finally treat coronavirus patients and overcome this coronavirus pandemic. However, in regards to investing in the stock markets, we should take a bigger picture look at the market as a whole and the economy as a whole. So I'm filming on April 30th, and yesterday with news that Gilead Sciences had their drug remdesivir producing positive results in clinical trials had the stock market going up. So the S&P 500 closed 2.7% higher yesterday, with the NASDAQ rising 3.6%, and Gilead itself advancing by more than 5%. However, if you take on a bigger picture look, Gilead has actually tested the same drug before in China with unsuccessful results. I think eventually we will have a coronavirus treatment or cure, because medical technology today is so advanced that this is inevitable. Also, there's support from the Federal Reserve, which is good for businesses and good for economic news and the stock market confidence as a whole, with the Federal Reserve saying that it will maintain low interest rates and promise of future support. Economies will eventually reopen, and this news really excited people. However, with a bigger picture look, we can see that this isn't the whole story, because the damage has already been done and economies have already suffered. So let's look at the United States. In the first quarter, the US economy shrank by 4.8%. And this is the steepest contraction since 2008. Consumer spending fell by 7.5% in March, and 3.8 million Americans filed for jobless benefits. Let's look at China. China records the first ever contraction in quarterly GDP on coronavirus, and GDP contraction of 6.8% foreshadows pain likely to be reported worldwide. And this is the first ever contraction since China began reporting quarterly GDP in 1992. So the two biggest economies have already suffered hugely because of the coronavirus pandemic. But let's look at Europe as well. Times reports that European economies are on course for unprecedented recession due to coronavirus lockdown measures. Reuters estimates that the EU is heading for a 5 to 10% economic contraction in 2020. Bloomberg is even more pessimistic. It says that Europe's economy is to slump more than 10% on virus measures. The European Central Bank is even more pessimistic. They said that they expect a 15% plunge in Europe's economy during the coming coronavirus recession. The New York Times also says that Europe's big economies are braced for the sharpest drop since World War II. So worldwide, economies are suffering and the damage has already been done. But this is inevitable because economies are cyclical. For anyone who has not taken economics or don't know basic economics, economies have phases of expansions followed by phases of contractions, which are also known as recessions. And there are a variety of reasons and theories as to why. Probably all of them have some degree of truth to it and all contribute to why economies are cyclical. But at the end of the day, empirical data shows economies always have periods of expansions and always has periods of contractions. So let's look at a chart of the US economy. We can see that the US economy, even though on the long term it continually grows, there's always periods of expansions and periods of contractions. And actually, we are due for a correction because we had just had the longest economic expansion in US recorded history. And that is why the 4.8% slump in GDP brought the longest economic expansion on record to abrupt halt. But because the economy had been expanding so long, this was inevitable and we should not have been surprised. So we are heading for a recession according to data, according to empirical evidence. So we should take this into account. These are tough economic times. It looks like we are headed for a recession, and although coronavirus treatments are good news for humanity and for society, and economies will eventually reopen, we should not overlook the bigger picture. And the bigger picture is the coronavirus pandemic has already damaged the world economy. Economies have already slumped by a lot in 2020. The economies are heading for recession, and we should not overlook that. What does that mean for you? That means that we should acknowledge the fact that we are investing in tough economic times, and we should always buy on the dip instead of buying on the rise. So yesterday was April 29th and the stock market went up, and we should not have been buying because the bigger picture shows that the economy is not healthy. And today that was reflected in the stock market because the stock market went back down. So I'm not saying this is a bad time to invest, because the drop of prices in the stock market can open a lot of undervalued stocks that are great investment opportunities, and you should always be buying when the stock market is low instead of when the stock market is high. So people who have bought stocks at the height of the stock market expansion have probably lost a lot of money. But now if you buy stocks, you'll probably take advantage of a long stock market expansion, because this is a low point for the stock market. However, don't be too optimistic on short-term news when the stock market is going up because of a sudden good news. Don't be emotional about it, and don't be buying stocks because of false optimism, because it went back down today. You should be buying when the stock market is going down and selling when the stock market is going up. Thank you for watching. Like, comment, and subscribe, and hit the bell notification so you get notified when new videos come out. Also, follow me on Instagram where you can DM me, and follow me on Medium where I write about the same topics I talk about on YouTube. The links for my Instagram and Medium are in the description below, so check that out, and I'll see you next time.